All right, so let's jump right into it with Windsor Machines Ltd and their Q3 2024 report. You sent over their official document that they released to both the Bombay Stock Exchange and the National Stock Exchange of India. It was on February 1st, 2025. This report lays out their unaudited, standalone, and consolidated financials for the third quarter. It's quite a bit to take in, so we're here to sort of break it down.
And it's interesting because what we see here is that Windsor Machines, they aren't just one giant machine. They're actually divided into two main business divisions. You've got extrusion machinery and injection molding machinery. And each of these divisions, they each have their own story to tell.
Oh, okay, so two divisions, two potential ways to make some money. What's the big picture look like? Did they make bank this quarter?
Well, if you look at overall revenue, it's definitely a positive story. They pulled in a total income of 24,604.32 lakhs. Now compare that to last year in the same period. They only hit 23,633.03 lakhs. So that's a pretty nice jump.
All right, so revenue's up overall.
Yeah.
But how about the profits? Are both of these divisions, carrying their weight?
Well, that's where it gets a little more complicated. So their profit before tax, that did go up overall. But the extrusion machinery division actually ended up with a loss. It was a loss of 1.55 lakhs during Q3.
A loss. That's not great. What happened there?
It's hard to say for sure without getting more information, but there are a lot of possibilities. You could be looking at things like increased competition or maybe rising input costs. It's something we should definitely keep an eye on.
Oh, go noted. So if that division's down, who's picking up the slack then?
It looks like it's the injection molding machinery division. It seems like they're carrying the team this quarter. They managed to rake in a profit of 130.28 lakhs, which more than makes up for that little dip from the extrusion division.
Okay, so you've got this sort of tale of two cities going on within Windsor Machines. One division struggling, the other one's thriving. Let's switch gears a little bit and talk about their subsidiary Windsor Machines SRL. It seems like things haven't been going so well over in Italy.
Yeah, that's putting it lightly.
Right.
Windsor Machines SRL, they are right in the middle of voluntary judicial liquidation. The court of Brescia in Italy approved the application for it back on December 30th, 2024. And they went ahead and appointed an administrator to oversee the whole process.
Liquidation, that doesn't sound good. What does that mean for Windsor's bottom line?
Well, if you look at their standalone accounts, you can see that Windsor had to completely write off the entire investment they had in Windsor. Financially, that's a really tough pill to swallow.
Ouch. Yeah, that's gotta hurt. But I noticed something in the consolidated financials, and it's confusing me a bit. It actually says that there's a gain of 3,790.71 lakhs because of the liquidation. So how do you make money when one of your subsidiaries goes under?
That's where we get into the really fascinating world of accounting. So when a parent company like this one cuts ties with a subsidiary, especially when we're talking about liquidation, there are these specific accounting adjustments that come into play. And in this case with Windsor, the difference between what they owed and what their assets were worth at the time of liquidation, that difference actually ended up being a net positive for Windsor. And that's why they're able to recognize a gain.
So it's not like they made money from this whole disaster, but the way the accounting's done it ends up looking like they made a gain.
Yeah, exactly. It's really important to keep in mind that these consolidated financial statements, they provide a different view than just the standalone accounts. And sometimes the numbers they give you can seem a little bit counterintuitive.
I'm starting to see the whole picture here.
Yeah.
So we've got one of their subsidiaries biting the dust. How about the other one, R-Cube Energy Storage Systems?
Well, there was also some major action over at R-Cube this quarter. Windsor decided they were going to sell off their whole stake in the company. And they actually signed the agreement for it in January 2025.
Interesting. Why would they decide to get rid of their entire stake?
Well, if you take a look back at the standalone financials from last quarter, you'll see that they already made an impairment provision of 919 lakhs. This is a sign that they were sort of anticipating this sale, and they probably thought it was the best way to go. Maybe because of how R-Cube was doing.
So they were already preparing for a potential loss then.
Exactly. And while they're expecting to get around 40 lakhs from the sale, it's not going to completely offset that loss from the impairment, but it will help to soften the blow a little.
That makes sense. So both of these situations, the Windsor liquidation and the R-Cube sale, are those just filed away under business as usual?
Not really. You'll see both of these transactions categorized as exceptional items in the financial statements. What that basically means is they're outside of the normal day-to-day operations of the business.
Right, so it's like separating those everyday business things
Yes.
from these big one-time events, the kind of things that can really shake things up. Speaking of shaking things up, let's talk about the legal and tax challenges that Windsor's going through. This tax liability situation seems like a pretty big deal. So what's the story there?
Yeah, that's definitely something to keep a close eye on. So Windsor lost an appeal. It was related to additions they made to their income tax return. And this was for a previous year, way back during the assessment year 2011-2012.
Wow, that's going way back. What kind of numbers are we talking about here?
In total, the liability, including interest, comes out to a pretty hefty 1,548.33 lakhs. And they've already exhausted all their appeal options with the Income Tax Appellate Tribunal. So now they're in the process of bringing in some expert legal counsel to figure out their next move.
Yikes. That's a lot of money. And speaking of changes, it looks like Windsor's had some pretty big personnel changes too.
Yes, they have. Let's start with the new company's secretary and compliance officer, Mr. Rohit Sojitra. He officially started on February 1st, 2025.
Give us the rundown on Mr. Sajutra. What's his background like? Does he have what it takes to, steer the ship?
He seems very well equipped for this role. Mr. Sojitra is an associate member of the Institute of Company Secretaries of India. He earned his membership in 2017. He also has a bachelor's degree in both commerce and law, both from Saurashtra University.
So he's got all the legal stuff down. That's good. Anything else?
He's bringing about 7 years of experience to the table in corporate secretarial affairs, corporate governance practices,
Yeah.
and legal matters.
Okay, so he's definitely got the experience. Now, what about this new additional director I saw? Mr. Hidendrapai Hasmukhai Patel.
Yes, Mr. Patel joined the board as a non-independent and executive director, also starting on February 1st, 2025. But his appointment, it's still subject to approval at the company's next general meeting.
All right, so what's Mr. Patel bringing to the table?
Well, he's a pretty seasoned engineering professional. He has a bachelor's degree in mechanical engineering and over 2 decades of experience in the field.
2 decades, wow.
Yeah.
That's pretty impressive.
Currently, he's a director for a few companies: Apas Cosmotech Private Limited, Marcon Life Care Private Limited, and Global CNC Private Limited. He's also a designated partner at ET Growth Partners, LLP.
Okay, it sounds like they brought in some real heavy hitters to help them navigate these, choppy waters. So with all of that, what does it all mean for the future of Windsor Machines Ltd?
Well, that's what we're going to explore in more detail. But first, we need to take a quick break. We'll be back to really break down what all of this means for Windsor Machines and what you should be paying attention to.
We've been through a lot with this Windsor Machines report: revenue subsidiary issues, legal hurdles, new leadership. It's a lot to take in. So help us connect the dots here. What does it all mean for Windsor Machines?
Yeah, you're right. It does paint a pretty complex picture. I mean, on the one hand, you've got some positive signs. Their revenue went up overall, and that was driven mostly by their injection molding machinery division. It seems like there's healthy demand for their products in that market.
Okay, so that's good, right?
Yeah.
That's a sign that one of their key areas is doing well.
It is. But then you've got the setbacks with their subsidiaries, that liquidation of their Italian subsidiary, and having to write off that investment in R-Cube. Those are some pretty big financial hits, and they can't just be ignored.
Yeah. The Wintel situation in Italy,
Yeah.
It really seems like a cautionary tale. What can we learn from that?
Well, it definitely raises some questions about their due diligence.
Right.
And their risk assessment when they go into foreign markets. Like, were there some red flags that they missed? It might be worth really digging into the specifics of that whole thing, just to try and understand where things went wrong.
I'm curious about them selling off R-Cube too. Was that just a matter of cutting their losses? Or is there like a bigger strategic move happening here?
Well, that impairment suggests they were already expecting to lose money, but it also seems like a strategic move to get rid of an asset that's not doing well and maybe refocus their resources. It could be a sign that they're shifting their overall strategy and deciding to prioritize certain areas over others.
Okay, that makes sense. It's like when you prune a tree to help it grow better in the long run.
Exactly. And let's not forget about that tax liability that's hanging over their heads, 1,548.33 lakhs. That's a big chunk of change. And the outcome of all these legal talks they're having, that could have a huge impact on how profitable they are in the future.
It's like this big dark cloud hanging over them. Even if their main business is doing well, that liability could really set them back.
Absolutely. It shows just how important it is to have good financial planning and risk management.
So we've got all these different forces at play: growth setbacks,
Mm.
gains and potential losses, legal battles on the horizon. That's a lot for any company to deal with. And speaking of dealing with things, you mentioned some key changes with their personnel. Do you think this new leadership team can help put Windsor on a better path?
Bringing in some new perspectives can definitely help to make changes happen. I
Yeah.
think Mr. Sojitra's expertise in corporate governance and compliance could be really important for them. It could help them strengthen their internal controls and their risk management practices, which could be really valuable right now with all these challenges they're facing.
Yeah, that sounds like a smart move, especially with that whole tax liability issue looming over them.
And then you have Mr. Patel. He has a ton of experience in the engineering world. I think his insights will be really valuable in terms of guiding the company's strategy, especially with how complicated their main business divisions are.
So this new leadership team, they could help them get through all this
Yeah.
and set a new course for the future.
Yeah, it's definitely possible. New leadership often means new strategies, a renewed focus on being efficient, and maybe even a whole different approach to risk.
But it's not just about the people at the top right. What about all the other employees? How is all this uncertainty affecting morale at Windsor Machines?
That's a great point. We often forget about the human side of things when we're looking at how companies are doing. When there's all this uncertainty about a company's future, especially when they're having financial problems and legal battles, that can definitely make people anxious. And it can have a big impact on employee morale.
It makes sense that if people are worried about losing their jobs, or if they're worried about the company going under, that's going to affect how productive they are.
Exactly. Low morale can lead to people being less productive, more mistakes being made, and even people quitting their jobs. It's a vicious cycle that Windsor's leadership is going to have to deal with, and
Wow.
they need to do it proactively.
How can they do that?
Yeah.
What are some things they can do to boost morale?
Communication is key. They need to be open and honest with their employees about the challenges they're facing, the steps they're taking to address them, and what their vision for the future is. If they create a culture where people feel comfortable talking openly and working together, that can go a long way in building trust and confidence.
So we're looking at this really complex situation: financial performance, legal challenges,
Mm.
leadership changes,
Mhm.
and the very human side of things with employee morale. It really shows all the different sides of the company's current state.
It does. And it makes you wonder what the future holds for Windsor Machines Ltd. Will they be able to get over these hurdles and come out stronger? Or will these challenges be too much for them to handle?
Those are the million-dollar questions.
They are, and while we can't predict the future, we can definitely look at the information we have and make some educated guesses.
And that's exactly what we're going to do next.
Mm.
As we wrap up this deep dive into Windsor Machines Limited's Q3 2024 report, stay tuned for our final analysis. And the key takeaways for you, and we've really gone deep into this Windsor Machines Limited Q3 2024 report. We've seen some really promising signs of growth, but we've also seen some big hurdles they're going to have to deal with. So as we wrap things up here, what are the big takeaways for our listener? What should they be paying close attention to as they follow Windsor's story?
Well, I think the most important thing is to keep an eye on those core business divisions. We saw how the extrusion machinery division took a bit of a hit this quarter, but the injection molding machinery division, that one really thrived. So is this trend going to continue? Will the extrusion division bounce back? Or are there some deeper problems there? And can the injection molding division keep up this momentum? These are all really critical questions to think about when you're trying to figure out how healthy Windsor really is.
Yeah, it's like watching a horse race,
Yeah.
trying to pick the winner.
Exactly. And it's probably worth digging a little deeper into those subsidiary situations too. What exactly happened with that Italian venture? Why did it fail? Were there any warning signs they missed? And what led to that impairment with R-Cube? When you understand the details of those situations, you get some really valuable insights into how Windsor handles risk, how they make decisions, and how well they manage their investments. That's really important information for any investor.
It's like a financial mystery. You've got to put the clues together to see the whole picture. And of course, we can't forget about that big tax liability they've got.
Oh yeah, that 1,548.33 lakh question mark. That's a big one. The results of their legal consultations are going to be really important. Will they be able to work out some kind of settlement? Or will they have to pay the whole thing? This could have a huge impact on their finances, so it's definitely something to keep an eye on.
And then there's that new leadership team. What about them? Do you think they can turn things around for Windsor and make it more stable and profitable?
We'll have to wait and see. Investors and analysts are going to be watching their every move. What kind of strategies will they come up with? Will they try to strengthen those internal controls? Will they be more careful with their investments and how much risk they take? And maybe the most important question, can they create a good work environment for their employees? especially with all this uncertainty going on. That's something to pay attention to as the new leadership gets settled in.
So we've got a lot going on here. The core divisions, how they're doing, what's happening with the subsidiaries, that tax liability, and the impact of this new leadership. It feels like we've only just scratched the surface.
That's the great thing about doing a deep dive like this. It makes you curious. It makes you want to learn more. And it reminds us that there's always more to discover.
So what's the one big thought you want to leave our listener with today? Something for them to really think about as they follow Windsor Machines Ltd's story.
I would say this. Windsor Machines Ltd., they're not the only ones facing these kinds of challenges and uncertainty. It's happening all over the business world. Every company, every industry is constantly changing. They have to adapt to the market, and they have to deal with unexpected problems. When you analyze these reports, when you understand how the finances and operations work, and when you see the decisions that leaders make, you learn things you can apply to your own understanding of business. It doesn't matter if you're an investor or an entrepreneur, or just someone who's curious about how things work.
Very well said. It's all about getting that knowledge and using it to make smart decisions. And that's what we try to do here on The Deep Dive. So until next time, keep exploring, keep asking questions, and keep learning.